Hello and welcome back to the channel. When it comes to stocks, my underlying philosophy, very simply put, is that trading will make you rich while investing will make you wealthy. Now, this is something that works for me for now, but my views may change over time. At my current age of 25, even if I find a ridiculously undervalued stock with incredible prospects and invest a meaningful chunk of my portfolio into that stock, the absolute amount is not going to be life-changing. For example, if someone has a $10,000 portfolio and they find a stock that'll go up 200 to 300% over 2 years, so they invest, say, 30% of their portfolio into it, which is a significant chunk. Their return on the $3,000 over 2 years is going to be around $6,000. $6,000 is a great percentage return on the initial $3,000, but the $6,000 made over 2 years is not a life-changing amount. You could probably earn more over those 2 years, suppose you were working as a freelancer. Also, there is no guarantee that the stock does go up 200%. The most important point here is that opportunities where you can make 200 to 300% on a single stock without leverage are extremely rare, and that is why I trade short-term over a few months to increase my current income in order to funnel the money that I make from trading into a long-term investment portfolio. Again, this kind of works for me, and a lot of people may have different opinions regarding this, but it's what I do. So now I'll explain my trading strategy and also my investing strategy to you. I trade on a platform called eToro, where people have the ability to copy each other. I'm listed on eToro as a popular investor. What that implies is that my profile has been recognized by eToro as a trader who is able to generate positive returns while maintaining a risk threshold. My profile is publicly available to view, so if you'd like, you could take a look at it. In the description below, I've included a link. When it comes to trading, my strategy is that I try to optimize volatility without using any leverage, and this includes avoiding any leveraged ETFs also. I look for stocks that have the highest potential to grow within a 1 to 3 month time frame, while hedging and rebalancing the portfolio to reduce volatility using ETFs. And at times I may just hold cash in the portfolio and wait to capture the best opportunities that are available in the market. The approach is focused on trying to make sure that the returns are always positive on an annual basis, irrespective of the market conditions. As mentioned earlier, the entire purpose behind trading is to increase my income and funnel more money into the investment portfolio. Unlike the trading portfolio, where a 20 to 40% return would suffice, in the investing portfolio, I don't bother looking into a company unless I have the possibility of gaining a minimum of around 200% over 3 years. So roughly like around 25% on a compound annual growth rate basis. Once I find such a business, I assess if the business is within my circle of competence and if the business is interesting enough for me to keep analyzing. Then I try to figure out the business model of the company. If that then makes sense, then I watch interviews and read articles about the CEO, the top management of the company. Now, after all that, if I can get my head around the business model and I like the strategy that the CEO is talking about, then I start digging through the 100 to 200 pages of annual reports, of quarterly reports, of articles about the company, and also I go through their financials. After that, once I come to the conclusion that yes, this is a business that could do well over the next few years, then I start taking a position in that company. This sort of approach leads to eliminating a majority of the publicly traded companies, which is great since it's not possible for me to understand and identify a lot of great businesses. I'm perfectly okay with not adding any new companies in the investment portfolio over, say, one entire year. I would much rather invest in 1 or 2 companies where I know that I can do really well over a time horizon of, say, 5 to 10 years. I keep up with the news about the few companies that I'm invested in, along with assessing the quality of their fundamentals and what the management is saying every few months. If there is any change in the underlying fundamentals or the direction of the company, or if another opportunity comes up, then I may rebalance the investment portfolio accordingly. Hopefully, me sharing my process helps you with your own process. If you found the video informative and helpful, do hit like, hit subscribe, that really helps out the channel. And as always, thank you for watching.